Congratulations on reaching your goal of graduating with your degree. Studies show that with your degree, you are more likely to make over $1 million more in your lifetime than someone without a college degree. For many students, taking out student loans was a means to reaching their goal. If you obtain student loans to pay for school, your payments will be starting soon. So now is the time to create a student loan repayment plan. First, create a list of all your student loans, including balances, loan terms, grace periods, and interest rates. You can check your promissory notes about repayment information. In order to create a list of your student loans, you must determine which loans you have in your name. There are 3 types of student loans: government, institutional, and private. You might have borrowed money from all 3 entities. If you completed the free application for federal student aid, also known as the FAFSA, you were most likely offered federal student loans. Go to studentaid.gov to determine if you borrowed from the federal government. Your parents could have borrowed from the federal government by taking out a Parent Plus loan. They can also go to studentaid.gov to view their loan terms and repayment information. You may have borrowed from your institution since some universities offer student loans. Check with your financial aid office to inquire whether you borrowed money from your institution. The third entity that offers student loans is the private sector, like a bank, credit union, or online financial institution. If you are unsure if you borrowed money from a financial institution, pull your credit report at annualcreditreport.com to view your credit history. Even if the loan is in deferment, you should see the loan listed on your credit report. After making a list of all your student loans, contact each lender or loan servicer to verify repayment information. Be sure to update your contact information with each entity. If you move and they can't reach you, you may miss important information on repaying your student loans. There are several questions you should ask your lender or loan servicer. What is my total loan balance? What is my interest rate? When is my first payment due? What is my repayment plan? Typically, students with federal student loans are put into a 10-year standard repayment plan. Students can apply to see if they qualify for an income-driven repayment plan. Talk to your loan servicer about your repayment options. It may be tempting to choose a longer repayment plan, but remember, the longer it takes to pay off your loan, the more interest you will pay. It is important to understand exactly how much you owe after college so you can factor in your student loan payments into your monthly budget. Create a budget and begin making your student loan payments on time each month. Be sure to stay current on all debt to avoid going into default. As you make student loan payments on time each month, you are building a positive credit history. Good credit can open doors for borrowing money in the future, renting an apartment, attaining utilities, and in some cases, obtaining a job. If possible, make extra payments towards your debt. With your degree in hand, repayment plan solidified, and process to acquire good credit, you are ready to build the life you want. This video was brought to you by Money Moments.